Hello and welcome to BusinessLine Context, our series which tries to provide the details and takes a more detailed look at happenings behind a story. All of us have been very closely monitoring and are actually engrossed in the developments happening with regard to the clash at this fintech firm BharatPe, where the managing director and one of the co-founders, Ashnir Grover, a couple of days back, announced his resignation. His wife, Madhuri Jain, who used to head controls at BharatPe, was sacked by the company, alleging financial misappropriation. However, the bigger picture is in terms of the clashes which happen on an ongoing basis between entrepreneurs and investors. India today has the world's third largest startup ecosystem. There is a huge amount of funds inflow which is happening into the country, supporting entrepreneurs to scale up. Entrepreneurs bring in the idea, the energy, the passion behind the start of any venture. It is investors who bring in a lot of value addition, not just in terms of the funding, but also in terms of helping this enterprises scale, open doors which otherwise would not be easily accessible to this startup entrepreneurs. Just to provide a little bit of context, while the BharatPe thing is the current development, this is not unique or new to the Indian startup ecosystem. There have been multiple instances in India itself. For example, Rahul Yadav, the CEO of Housing.com, was ousted by his investors after there was a clash between the investors and the founder. Similarly, there have been a number of reports of tensions at places like Flipkart, Snapdeal, Ola, between the entrepreneurs and the various investors at the differing points of time. To take a comprehensive look at the kind of issues which crop up between entrepreneurs as well as investors, and to talk about that, we have a very distinguished and a very experienced guest today. It's my pleasure to welcome Krishnakumar Natarajan, a 4-decade-old industry, IT technology industry veteran. I've had the pleasure of knowing him at multiple ventures wherein he has either worked or launched. Just to give a little bit of a background to KK, as he is called by everybody, KK helped build and scale Wipro's technology business along with a lot of entrepreneurs. He then eventually moved out with a bunch of them to co-found and kickstart MindTree, which scaled very, very successfully before at some point of time deciding to eventually exit. KK has also been a very active angel investor. He has invested in more than 30 plus startups. And now very recently, he has even set up a fund to invest in B2B, business to business, early stage ventures. So KK is somebody who has been on both sides of the spectrum, both as an entrepreneur as well as a investor. Therefore, it would be probably he would bring a lot of value in terms of the kind of issues which crop up. KK, welcome to BL Context. Thank you.
Thanks a lot, Venkatesh. Really a very generous introduction of mine, and hopefully I'll be able to add different perspectives in this very important issue which we're going to discuss today.
Absolutely. Why don't you start off by giving a little bit of perspective on when does an entrepreneur decide to bring in an investor? What are the criteria he looks at before onboarding an investor? If you look at even in the India context, there have been a couple of very, very successful entrepreneurs who have said, we will never take external funding at all. Let me give a few examples. For instance, Sridhar Vembu, who has built Zoho into probably a company which would today be valued in a couple of $1 billion. Or if you look at the Kamath brothers at Zerodha, who have built a very successful discount brokerage. they are very clear that they don't want external investors at all at any point of time. You have been an entrepreneur yourself, having kickstarted and grown companies. What are the criteria you looked at that point of time, and what should weigh on an entrepreneur before getting somebody on board, KK?
No, I think it's a very valid option in terms of being bootstrapped. And clearly, like you mentioned, both Sridhar and Nikhil are great examples of that. But on the other hand, I would think that the opportunity to bring in an external investor who then helps you scale the company and do it rapidly is also a viable alternative. Again, context change, but probably at MindTree, we were one of the first companies to raise external capital, even at the time when we launched the firm. Knowing IT services, it's not a capital intensive business. Yes, you need capital in the initial stage once you have a few customers. It is a business which generates profit, and if you want, you can really run it like that. But the intention to get external capital was to see how do we accelerate our journey, because we started as an internet services company. And particularly one of the things entrepreneurs need to be aware of in markets which are growing is that the velocity of movement is very important. And you have to gain market share, and gaining market share after a certain position has been established is far more expensive than moving with speed when markets are growing. Yeah. So it was that driver which sort of helped or made us think through of external capital. We raised at that time, about 22 years back, 9.5 million in the first round. And then subsequently raised another round of about 6 million. So overall, the company just raised about 15 million. But a couple of things which we really looked at. I think the journey of building an enterprise is not an overnight job. I think it takes time. So what is the value match between you and the investors? Are they aligned in terms of how you want to build the company, where you want to take it? Because it is very important to have complete alignment of the vision and how do you want to build the company. Yeah, I see that as a very important aspect. The second key aspect is what is the additional knowledge or experience which the investor can bring in. Now, because while as entrepreneurs, you would feel confident about the business, there are several areas where you might need help. And if you think of it as a partnership, what will the partner bring to you? That's extremely important. The third aspect is how do the investors react when there is trouble? And I think that's again a very important thing in building a company. It is never a smooth journey. You will make mistakes. Even at MindTree, in the first 3-4 years, either due to external market conditions or some errors which we did, the business went through tough times. But at the same time, the investors believed in us and backed us, saying, yes, we know there's an error, but let's see how we can build a company. So the third aspect, which I think is extremely important for entrepreneurs to consider, is how open are investors to potential failures, and are they willing to then work along with you and see that you come out of that and start a new beginning. And particularly in the current startup world today, that's extremely important because businesses are competitive. You need to pivot your business a couple of times. And those are things which investors should be comfortable with. So I see those three as being very important for an entrepreneur to consider.
Do you see that a part of the issue today is the fact that a large number of first generation entrepreneurs are entering, kickstarting in India for the first time? The price of failure, it is becoming much more acceptable to start in India, kickstart an enterprise on your own. So these are mostly first generation entrepreneurs who are coming in. Some of them are bringing investors on board, purely looking at the valuation aspect and not necessarily some of the other stuff which you just highlighted. Do you think that It is therefore primarily a question of trust deficit, a clash of cultures in terms of outlook, and a large number of investors too, KK, in the India context are international investors. Unlike, say, Mela, which is primarily backed by your own venture, which is primarily backed by local LPs, whereas there it is largely international investors. Therefore, do you see this as a question of trust deficit, greediness on the part of entrepreneurs to extract maximum value, as well as a clash of cultures in terms of outlook?
No, that's a very interesting question. And my own take on that is, I think it's important to understand what are the drivers for value creation. Now, honestly, we tell our entrepreneurs, create value for the business. Valuation is an outcome of building value for the business. It can't be you put the horse before the cart. You ought to build value in the company, and valuation will follow. And that is something we realized in MindTree. I think we ran a high quality business, highly transparent, and markets rewarded us for that. And we continue to emphasize that with entrepreneurs. And to that extent, is the mindset of the investors to be different? Yes. I think investors need to be a little more patient. They need to be clear what are the foundations by which value will get created, and work with entrepreneurs to do that. Unfortunately, what's happening is today, I think partly I would maybe slightly even blame the media for that, because I think too much of importance is given to unicorns and what short time they've created a unicorn. In 6 months, some company has become a unicorn. Honestly, good stuff takes time. The best wine takes a lot of time. I'm not saying in the startup context it takes that, but to build an organization which is sustainable, I think you have to do it customer by customer, brick by brick. In fact, we tell entrepreneurs building an enterprise is like building a temple. You need to do it brick by brick. You need to love it. Yes, there'll be problems, but you need to do that step by step. And since the whole exposure is towards unicorns, how short time they have made it, which obviously I think is maybe a driver for the external media. I think youngsters or the next generation of entrepreneurs tend to get influenced by that. Because ultimately they look at saying, hey, my batchmate and I am Cal, he built a unicorn in 1 year, so what am I doing? So it's important to not get influenced by that, which is what we tell our entrepreneurs, saying that I think creating category leaders is tough. And if it takes time, yes, it does take time. But we'll do the right things. Like we tell them always, culture and values which you build in the company is not something which you can think about after you have grown to, say, $5-10 million. It is a very foundational element. Every person needs to walk and talk that. And if you just build it and later on try and put it as an add-on, it never works. So it's important that entrepreneurs don't get influenced by all the hoo-ha around. They just focus on the basics, because honestly, none of what they need to do is rocket science. It is very simple. If you just look at successful companies of the last 50 years, I think you learn from them, and it's very simple to do many of those. And to build a sustainable business, you just have to address the basics.
Also, a part of my earlier question with regard to international investors probably being not aligned to some of the cultural expectations, the way things work in India, the way investors actually address issues. Is there also a mismatch in terms of some of these international investors and what the local entrepreneurs can do and deliver?
See, I won't think of it as a mismatch to international investors, because honestly, there are many funds in the US or things which also are patient capital, which build very sustainable enterprises. It's just that the ecosystem in the investing world has changed. I think there are people who take a very different tack without stating names. There are some people who really think capital is what is the mantra for companies growing. So you put in a lot of capital and then they think that companies will grow and consequently valuation will grow. I'm not saying it's right or wrong, but it's a very different approach. To the extent, I think it is the type of investors and what is their approach towards investing, which brings this culture clash, rather than where the investors hail from.
When you yourself scan for investments, what do you look at, KK? Is it the business and the idea, or is it the entrepreneur behind the idea? What do you look at before deciding to take a bet?
See, in Mela's case, since we understand the B2B space, in our mind, we have a few theses of what will become very large in the global enterprise context over the next 5 to 10 years. Like one bet we are making is that while there's a lot of talk about artificial intelligence and a lot of the AI is applied to data, the next big wave is going to be applying AI to computer vision. So any intersection of computer vision and AI, which is solving a real business problem, is where we are excited about. And so we look for companies which are doing such work. Once we identify, yes, there could be 2-3 companies. Clearly, the most important thing is the entrepreneurs. What is their passion for building a large, scalable, high-quality business where they are committed to transparency, they're committed to being high on governance and taking the knocks which it brings along, because it's a choice. When you make a choice of being highly transparent and highly transparent, you make a choice. It doesn't work in all environments. So the entrepreneurs and their focus on building high quality organizations is a very key aspect of us.
So between the business idea and entrepreneur, you always bet on the jockey rather than on the horse.
Yes, we would. In fact, there are cases where when we felt that probably the wavelength of the entrepreneur will not match, but the idea was very much in our thesis, we have still opted not to invest.
While there are obviously multiple versions of what transpired at BharatPe, and we will not get into it, how does an entrepreneur or an investor address when inevitably, like in any marriage, when differences arise, how does one address to ensure that the overall interest of the company, because beyond the entrepreneur and the investor, there is a largest stakeholder ecosystem also, whether it's the employees, whether it's the customers, whether it's the external world at large, their suppliers. So how does one ensure that there is very minimal impact, and how does one ensure trying to resolve this kind of differences?
See, I think it's very important for entrepreneurs to take what I think is almost the role of a statesman in this. I'm very deliberately using the word statesman because I think you need to rise above what your personal ego and desires are. And in doing that, it's very important to put the customers first and the employees second, and see what is right for the customers, employees, and the company. And that should drive what the process is. To the extent I can pretty much sort of share in the MindTree context, while I think we went through a process of an open offer done by L&T, I think we could have got that cycle elongated for 3-4 years, but we said it is not good for the company, it's not good for the customers. To the extent whatever will happen, and we just sort of exited out after that. So it's important not to let your personal egos, your personal desires drive you, and be a statesman to see what is best for the company, for the customers, for the employees, and do what is right. If entrepreneurs start following that, I think a lot of, yes, of course, will there be differences in the board? Absolutely, yes. Because at the end of the day, to be honest, I think only one person can drive the vehicle. You can't have multiple drivers. So somebody needs to take charge, and that position can be evolved through a matter of closed door negotiation if such what I call an irreconcilable difference comes in. But it should never come out in the open. And I think that's not good for the company. It's not good for the customers, not good for employees.
What do you have to say now that you are on the other side of the table as an investor now? What do you have to say to entrepreneurs who insist on bootstrapping and labeling largely venture capital as vulture capital, primarily looking to squeeze maximum value out of an entrepreneur's hard work and his idea and his drive? Now, as an investor, how, when you meet entrepreneurs and when you evaluate them, how do you convince them that whether it is Mela, whether it is somebody else who's trying to ensure that they get on board, that they are the right partners?
See, one, obviously, I think there has to be, like I said earlier, a value match and a wavelength match between the entrepreneurs and the investors. If that's not there, then I think it does not make sense, because at some time the fight will erupt into the open. On the other hand, to be honest, while I think people do perceive venture capitalists as vulture capitalists and so on, the fact is, it is essential for the organization to get growth capital. And to that extent, it's a very conscious choice which entrepreneurs have to make. And we have enough of very successful role models, like you talked about earlier in the show, of either Sridhar or Nikhil, who have done it very successfully. So if you have the confidence that, yes, I can bootstrap and I'll grow an organization, then you should follow that path. There's no point when you don't have the ability or the confidence to do it, and you take a path of raising external capital. Then you have to respect your investor. I can, in fact, in a very lighter vein, say of, I met an entrepreneur once. He just raised a sum of capital, early stage, Series A or Series B, and because I was doing some work for a client, this was after my MindTree exit. So I was traveling business class between Bangalore and Mumbai. And this entrepreneur also traveled with me. To me, that is absolutely not respecting your investors' money.
Okay.
So it's important to give respect both to the investors and the money which they bring in, and you demonstrate that respect. I think investors will love you.
Given that we are increasingly becoming a startup nation with more startups ever being kickstarted on an ongoing basis, more funding flowing into the country, do you therefore want to see some kind of a mechanism which is put in place, an independent mechanism of an arbitrator right now? Each time, because most of these companies are parent companies, incorporated in Singapore or elsewhere, and they run for arbitration elsewhere. Is there any kind of framework which the Indian startup ecosystem should look at to resolve this kind of differences? Because this kind of things will happen, whether we like it or not, given the scale at which the startups are coming in, and as the funding, as we said earlier, is coming in, it's almost inevitable. So are there any frameworks which we can look at, KK, to ensure that this get resolved fairly early and easily within the country?
No, I must be honest, already we have enough of a regulatory framework, which I think is very good, which protects both the entrepreneurs and the investors. So I don't think an additional framework is required. But I'll tell you, conceptually, while I think a lot of time investors and entrepreneurs spend time on the legal documents, a shareholders agreement or an SHA and so on. Now, the fact is that practically lays down the guideline for every potential issue which could be there. And I always maintain with entrepreneurs, if you have to go back and refer to that document, let me tell you, the relationship is already broken.
Sure.
And the relationship is broken is like a Chinese porcelain. You cannot mend it. So it's important not to leave to that state. And I see the owners both on the entrepreneurs and on the investors, because you need to have a connect with your investors or with entrepreneurs on a no agenda basis. In fact, at MindTree, when I was the chairperson of the board, I used to meet the independent directors outside board meetings without an agenda, just to understand what are anything which is brewing up in their mind. And it's very important to bring out issues in the front before it sort of gets escalated. Yeah. And that's the only way. I don't think a regulatory framework will solve this. It is human interaction, and you can solve it.
Open and frank communication plus trust is what we are all looking for. Wonderful. Thank you so much for your insights, KK. Wish you and Mela the best. Look forward to continuing to track your investments and how well they do in the India context. Thank you so much for your time. It's been a pleasure.
Thanks, Venkatesh. It's been a pleasure to be on this show.